Hi traders, Dr. Barry Burns here with the Top Dog Trading video for the day. Okay, took the Dow here. This is a monthly chart of the Dow. Took it all the way back to 1929, the Great Depression, and Black Tuesday, and just this horrific time in history. And you can see how the Dow had been in an uptrend here, and then boom. Major drop. Look at the range and the volatility, just a vertical drop. Retrace to the 15 moving average, that's what that black line is, and then just continue down for years. This is 1929. So 1930, 31, 32, 33, and then it starts to climb out of it. But, and by the way, look at what it dropped from. Almost 400 down to about 50. Can you imagine the Dow being at 50? Well, it was. But the main thing is the percentage drop that is just astronomical. Horrific. Then it looks like we're coming out of it, and everybody's thinking, okay, finally we're coming out of this, and then actually the market just comes back down and starts going sideways. And these are some moving averages here, and it goes all the way back down to 100 again. Almost got up to 200, goes right back down to 100. So from 1929, now we're all the way into 1943, 44, 45. And now we start to get back above those moving averages. Then it looks like, oh, it's going to be good. And then it just goes sideways again. So now we're into 49, 20 years, 2 decades. And we finally start making some headway. By the way, these moving averages are, I mentioned the black one's the 15 moving average. The red one is the 50. The gold one is the 100 simple. And the orange one is the 200 simple moving average. Okay, so finally we get a nice trend, and look at that. Boom. Now we're talking. Now we're cooking with butane. Very nice. We get a sharp retrace here. We get some retraces, but still on a monthly chart, you know, it's all good. Retrace and hold the 100 moving average here again. Pretty scary stuff here. The market went all the way from 750 down to about 550. That's a major drop. But again, why am I showing you this? Just to show you the history of when the other times the market has had these major, very vertical drops. Look how vertical that is. Same thing with the Great Depression. But again, this one didn't last very long, a few months, and we're right back out of it, continuing with our uptrend again. Boom, 66, very major vertical drop, made it to 1,000, that big round number. Market said, ooh, that's pretty exciting but also scary. Dropped all the way back down to about 750, climbed its way out of it, went right back to that resistance level, and got spooked back down. Of course, there's a lot of history behind all of this too, which in a short video we don't have time to go into what caused all of these things, the historical, political, economic, wars, all that stuff. Obviously very important as well. Again, major vertical drops. Look how vertical that is. 75, we hit the bottom here. We make our way out of it. This one took about 2 years to get out, about a year and a half, we'll say. Okay, this one only took a little over, well, yeah, about a year. This one, 1.5 years. Chop around here for a while. Here's something I wanted to point out. This actually is pretty important. Okay, that's good enough. So, from early 70s to early 80s, see, here's your dates down here. These are the years. Because remember, this is a monthly chart, so each one of these bars is a whole month. Okay, look at your 50 moving average, the red one. It's just going sideways. And price is above it, below it, above it, below it, above, below, above, below, above, below. So the net gain for 10 years is nothing, because the average price remained right in here just below 900 for 10 years, for a decade. So this is the kind of stuff that drives long-term investors out of their noodles, right? They hate this stuff. I mean, how patient can you be? This is why I feel it's helpful to learn how to trade, but granted, very, very difficult thing to do. So at least get very diversified in your portfolio. Consult a financial advisor, professional consultant to diversify your portfolio, because if you're in the stock market and that's all you're in during a period like this, you're not making any money for 10 years. And depending on your time horizons and so forth, that could be very serious. Anyway, we get out of this and we've started into a really nice trend. I mean, now look at the market goes crazy. But there's 87. Okay, remember the infamous Black Monday. And of course, again, that's a monthly bar. But 1 month, very wide range, horrifying. Everybody was freaking out, and look at the value lost in the market from 2,600 down to 1,600, roughly. Just losing a tremendous amount of value very, very fast. And yet, moving averages are still all up, and the market continues its way back up. So this was very short-lived, as scary as it was. And then we continue into this incredible trend. Boom, man, market's just, I mean, I've got to change the scaling here because we're in such a tremendous trend. And okay, now we get into the tech crash, if you will. Now here the NASDAQ, of course, experienced a worse retrace than the Dow. But again, you know, from roughly 2000, end of 99, it lasted 1, 2, 3 years, 3-year bear market until we got out of this. Then we get back up above our moving averages, and we hit new highs on the Dow, and it's almost 1 year to the day that we reached that high. And now here's where we are at this moment in time. Today is October 10th, 2008. This is a monthly bar, so it is not a finished bar. It's not a completed bar. End of October, this bar will not look like that. But it is important to note that we are at least at a support level. Now, whether that support level will ultimately hold or not, we don't know. But that's your 200 moving average. This indicates, this wick down here indicates that the market is at least acknowledging that 200 moving average. And again, you know, compared with the other bear markets, we are 1 year into this bear market right now with, again, wide range bar. So we've been here before, folks, with similar type things. It'll happen again as part of the natural ebb and flow. There's all different reasons that it happens. People get very, very scared. But for a good trader and a good investor, these bear markets do provide opportunities to find good value and actually can make a lot of money over the long term by getting into some excellent opportunities in these bear markets and holding them for the long term when a new bull market starts up again. Can't give you any specific recommendations on that. Talk to your own personal financial advisor and determine the timing and the markets that are right for you.